So welcome, Let's Talk Property. We're here in San Diego. As you can see, we've got a magnificent view behind us here in the bay. But more importantly, I'm standing here with Marco. And Marco, you and I met each other 2 years ago. I'm back here now. We just shared a really nice lunch with this magnificent view behind us. Tell us a little bit about yourself. You've been in the property game a long time. I mean, just to reiterate what you said at lunch, you operate a company that helps more investors in this country invest than almost any other. I think you said the top three. But tell us a little bit about that.
Well, I started investing when I was 18 years old, so I've been investing in real estate for a long, long time. Back in 2003, in the middle of the U.S. housing bubble, I started a company to address investors' needs, providing completely turnkey, leased-up properties that were positive cash flow, sometimes had equity. It had to be a turnkey model for investors because that's what they wanted, so we made it effortless and brainless for them. And they wanted good yields and sometimes equity, maybe appreciating markets at times. Sometimes they wanted just cash flow markets. But we're in about 30 different markets right now, and we can pretty much cater to any investor's needs at this point in time.
And tell me something I actually found you on Twitter many years ago when I was trying to find people that understood the market. I mean, you said something over lunch that for me is so important. A lot of people try and focus on the property, and that's where they burn themselves because they don't understand the macro issues, what's going on in the economy and supply and demand and jobs and everything else. And that's why I found you originally. I love the research and trying to understand it. And you've got sort of some of the most sophisticated research I've found in terms of the market. Tell us just a little bit about the research that you do, et cetera, and your background from that perspective.
Yeah, well, I appreciate that. Anybody could buy a nice piece of property on a junk street or in a depressed market, but that doesn't do the investor any good. So my approach is to start with looking at the macroeconomic factors of a metro area or a city. What's the housing market like? What's the level of inventory like? Are people moving in or moving out? So what we call net migration. Are there jobs? Is there expansion in that economy? Those are all critical factors. If that looks good, then you have a sound foundation to invest in that particular market. Then we start looking at neighborhoods or suburbs and streets, and then eventually the property. All properties can be rehabbed and made to look nice, but at the end of the day, you want good property in a good neighborhood, in a good market, with a good tenant, and most importantly, a good property manager, because you're going to live and die by your property manager, especially if you're 3,000 miles away.
Yeah, no, 100%.
So.
Well, look, you said something earlier, and I want to repeat it because it's classic. You don't want a good property in a war zone, which I think is classic. Just on that, just in conclusion, basically. When you look at the property market, and I know you don't have a crystal ball better than anyone else, but the people that do the right research ultimately get to better conclusions than people that don't know what they're talking about. Two questions. Roughly, where do you see the market now and where do you see it going? And secondly, if you were going to pick your top three locations, where would you be looking at right now?
The second question is a hard question to answer because it's always hard to pick the top three when you have 10 or 15 great markets to invest in. Your first question about where the market's going, I beat this into investors' heads all the time. All real estate is local. What's happening here in San Diego could be different than what's happening in Detroit, Michigan, which is different than what's happening in Tampa, Florida. All markets are local, so you have to look at every market on its own merit and it has its own factors. So I think most markets in the U.S. are going to drag along the bottom for another 1 to 3, maybe 5 years, and the government's involvement in toying and tweaking policy and what Fannie Mae and Freddie Mac do here in the United States is going to affect how long we drag along the bottom. But some markets have been turning around. Phoenix is really hot right now. Inventory levels are below 30 days, so it's tough to find property there right now. We just can't keep inventory in that market. Other markets you can find just tons of inventory because there's just a lot of supply, not a lot of demand. You can find some good deals, but really, you have to look at every market. I mean, I can't give you a very specific answer because it's market by market by market. But in general terms, I think the next 1 to 3 years are prime buying opportunities for all your investors. So I hope you guys buy a lot of property over the next 3 years because you're going to get your best deals right now.
So, just a conclusion, and just to sum it up then, if you've got the right research, you've got the right partners on the ground, then there are good opportunities at the moment.
There's tons of good opportunities. You just have to be careful in where you invest, who you deal with, and what you're getting. And then lastly, the property management. and you know, we take care of all that stuff, and working with you, it would just be a pass-through effort.
Perfect. Well, thank you very much.
Thank you.
Cheers.